Okay, everybody, welcome to a new session where we're going to be introducing our very first trade idea. This will be an exciting video, and this is the first trade idea of many ideas to come. And really, from this part in the program, as we move forward, we're going to be introducing a lot of tactical information that you can take out. You can start using this immediately and start seeing results with it. So like I said, this is a very exciting session, the first of many to come. And as we're going through from here on out, I really want to encourage you, starting with this session, just make sure that you're in a position where you can be very focused as we go through this. We've covered a lot of information in this training that, if you miss a little bit about the charting package or something, it's probably not the end of the world. But as we start getting into the method here and start talking about the tactics and the strategy, if you miss a piece of this, it can change everything. And it would be very common to go through these sessions and to just miss one of the key parts and then to go out there and start using this, but to get mixed results or to feel frustrated. And the source of that frustration is we're not actually doing the trade ideas. We're doing something else. And under the rules and the structure that I'm going to give you, if you're doing something outside of that, you're just out there doing something else. And we can expect the results to be mixed and a bit frustrated. So as we go through these sessions, I just want to encourage you one more time, just please make sure you're very focused as we go through these so that you can try to pick up on as much of this as possible. But let's get started. Here's what we're going to be talking about in this session. We're going to start with looking at the theory of go with the flow. This is going to be our first trade idea. This is going to be just understanding why this makes sense, why this surfaces. I'm going to talk about the rules for go with the flow so that we understand what is that repeatable action? What is the pattern here that surfaces that we can get in and start taking advantage of? We're going to look specifically at this go portion and understanding what that means to make sure we're very clear about this. We're going to look at reading the flow part of this trade, that the flow that makes up go with the flow, to make sure that we holistically are seeing the pieces that make this up, and individually we know what these two big pieces are that make up this as a trade idea. We're going to look at some examples of going with the flow, and then I'm going to end the session talking about multiple VWAPs and having multiple time frame analysis. So a lot of good things to cover. Let's jump right into it, starting off with some of the theory behind go with the flow. Now, just as some introductory thoughts here, some things that we need to understand about the markets. The reason that we have the market, and the market exists to match together buyers and sellers. The market doesn't exist just to screw over the little day traders. It doesn't exist to take your money. The market is trying to do a job. It's trying to match together buyers and sellers. And when buyers and sellers agree on price, we have balance. And when buying and selling is not in agreement, the market enters into some type of trend, or we get into imbalance. And with this as a core understanding, we can look at the market and understand that the only thing we can be doing is in some type of balance or some type of a trend. And you can pull up any chart on any product and look at any time frame, and you're going to see some version of this. The market will go through these periods where we balance out. And then we'll go through these periods where we're in some type of directional movement. And again, at a base level, this is all the market can do. We go from balance to imbalance, back to balance, to imbalance, back to balance. And this is a fairly zoomed out chart. So each one of these candles are going to be a full day session. And so even in this seemingly small area here, this is several days of just the market moving in one direction. We were balanced, everybody was agreeing on price, something changed, we entered into a trend, we started balancing out again, and then just rinse, wash, and repeat for eternity here, okay? Now, the market exists to match together buyers and sellers, and when buying and selling is agreeing, we have a balance. When buying and selling is not in agreement, there's some type of a trend. Now, before we go any further, let's make sure that we can recap the tool that we introduced in the last session. So looking at this, you should be very familiar with what's on the screen right now. And let's just make sure that we can identify what are the key parts here of this tool, which is VWAP. So if you're looking at this middle area that's running through this line, we should be able to identify that this is VWAP. Now, what is this area around VWAP right here? This first area around VWAP. As we're looking at this, we shouldn't say that this is one deviation away from VWAP. We should just recognize that this is the value area. And it's important that we just have the same phrase, that we're focused in on the same things here, and we're speaking the same language. So this is the value area. This is VWAP. And then these bands above and below Again, this is not 1.5 deviations and 2 deviations away from VWAP. This is a deviation away from value, is how we should say this and how we should think about this, again, just so that we're all on the same page here. So we have VWAP, we have the value area, we have a deviation away from value on either side. And inside of this value area, we could say that this is value area high and this is value area low. We introduced this tool, and those will be some of the key parts just to make sure that we have that in our minds. Now, going over some more of this theory here, this is going to start introducing the repeatable action that happens in the market that we can then start to observe and take advantage of. So first point here, when the market is holding value, we likely return to VWAP. Second rule, if we hold VWAP, we likely return to the value area extreme. And if we break VWAP, we likely move to the other side of value. So let's unpack this piece by piece and look at some action here. Here we have when the market is holding VWAP, we return to the point of control. We return to VWAP. When the market is holding value, we return to VWAP. I'll probably say this interchangeably a lot, but if you ever hear me say the point of control, I mean VWAP. From my profiling background, I interchange these phrases quite often, but just as a heads up, if you ever hear me say point of control, I'm referring to VWAP, okay? And I'll try not to make that confusing or to mix that up often. So we have holding value and we've moved to VWAP. Here we're holding value, we move to VWAP. 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 Repeatable type action that this tool allows us to see and that we can start taking advantage of. Now that was the first part. The second part of that was if we hold VWAP, we're likely to return to the value area extreme. So here we are, moving to VWAP. We're not able to get through VWAP. VWAP holds, and then we move down to that value area extreme. Here we are at value area high. We move down to VWAP. VWAP holds. We can't get through it. And then we return back to that value area extreme. And then the last part we looked at, that if we get through VWAP, we're likely to go to the other side of value. So here we are, back inside of value. We get through VWAP and we go to the other side. We're at value area high. We come down, we get through VWAP. We go to value area low. As we come off of value area low, we get through VWAP. We go to that value area high. Rinse, wash, and repeat. This is very repeatable type action that we're going to see on the screens that we can start taking advantage of and build a trade idea around. So this is the first couple parts. Let's add one more part onto this. If we cannot hold value, the market is likely to continue pushing away. So the examples we were just looking at of the market being in balance and the market holding on to that value area, to flip this around, when we are unable to get inside of value and if we're not holding value, we should expect that we just continue to push. In this example, we're seeing the action is trending and getting directional to the upside, but the same thing would happen, of course, if the market was moving lower. And so before all of this is a clearly defined trend, even far back in here, we're not able to get inside of value. And we just continue to push away, we continue to push away, we continue to push away. These are the four main points of the theory here and part of the repeatable action that you want to make sure that you memorize, you get very familiar with. And this becomes part of, this becomes very ingrained in you. Because if you want to trade this as a trade idea, it'll be very important that you understand each one of these parts, each one of these rules, so that we can go out there and that we can start trading this. Now, let's talk about the going with the flow portion of this, or starting to understand how do we tie some of these things together. I'm going through this fairly quickly, and there's a lot of information here. So you can feel free to watch this through a second time, but even as I keep going through this, we're going to keep returning to all of it. So I'm going through and we'll just keep rehashing all of it. So don't feel overwhelmed. And at any point, if you feel you need to stop and go back, please feel free. Now, talking about trading this go with the flow. So we understand some of the theory. The market is trying to match together buyers and sellers. The market is either going to be balancing out or it's going to be in some type of a directional move. If the market is holding on to value, we're likely to go to the point of control. If we get through that point of control, we're likely to go to the other side of value. If we can't get through that point of control, there I'm doing it again. Every time I say point of control, I've meant VWAP. It's the same in my mind. If we can't get through that VWAP, we're likely to return to the value area extreme. And then on the other side, when we're not able to get inside of value, we're holding outside of value, we expect us to continue pushing in that direction. So what do we do with that information? It's nice to be able to recognize that as a pattern, but let's talk about it. The first thing here is we want to make sure that we are going with the flow. This is the trade idea. We go on the daily VWAP and we flow on the weekly and the monthly VWAP. Now, specifically what I mean by that, when I say go, this means that we get our entries, our stops, and our targets off of that daily VWAP. So our initial entries, the stops, the target, we're trading off of the information that we see on the daily VWAP. And when we say flow, this is the context. We are getting our context from the weekly and from the monthly. And by context, I'm mainly referring to the direction of what the market is, where the market is heading. We're going to be able to see that contextual picture on these higher time frames, and then we drill into the smaller time frame where we're going to be placing the trade. Let's take this step by step and start with just the go portion. So here we're looking at two daily VWAPs, and looking at this action here, if we're understanding that we should be looking to go with this, this is where we want to look to trade, where we want to look to enter the market, where would we be doing that? The only places that we want to interact with the market are going to be at the value area extremes. The value area extremes on the daily VWAP. So in an example like this, where the market is holding on to value, inside of that repeatable action, as we get to these extremes and as we get to the VWAP, we understand what's most likely to happen next. But the only places that we want to enter are going to be at value area high or value area low. We only want to enter at these extremes. When the market is outside of this value and continuing to push away, we only want to consider entering at the value area extreme. In this case, it would be the value area high, and then we would flip that around if the market was moving lower. Now, when the market is in a situation like this where we're pushing away from value, as we are maybe in an area like this, we don't want to start looking to enter long and to be pushing into the trade and to entering the market. We need to make sure that we are entering at these value area extremes. Again, what I'm talking you through here is a very specific trade. And if the action is doing this and you start pulling entries out in this area, you're not doing this trade. You're doing something else, which potentially can be fine and you can develop that on your own, but just understand you're not doing this, okay? And there will come a time in your trading where when the market is potentially pushing away from value and we pull back to maybe this deviation from value and you get long in to take that up, or as we're testing this extreme of the deviation, you fade that back down for a temporary short. There will potentially come times in your trading where you can execute at that level. But let's just be clear about the process that we're in right now. I'm introducing you to an idea. And whenever you learn something for the first time, we all start at the base level of being a novice or being a beginner. And when we're at this stage of being a beginner, it's very important that we just have the humility to understand, I'm learning this, I'm at a beginner phase, and I don't have the skill level to be taking the rules and bending them. I need to just learn this, I need to follow the rules, and I just need to make sure I'm doing all the right actions. Now, if you don't start skipping steps, and if you don't start being creative and doing your own thing, if you just follow this, what will happen is you're going to go from being a beginner to being more advanced. And the more advanced you get with this trade idea and every trade idea, you're going to have the ability to start taking these rules and bending them and start putting your own spin on things. And you're going to get to a point where you realize that you are not me. We see things differently. We are going to be different types of traders. And you get to a place in your trading where you can start creating your own and you can start taking these initial skills and these rules and these trade ideas that you've learned, and you can take those farther. But all this comes in time, and we can't rush to that. We have to make sure that we're beginning and we're just, again, having that humility to understand whenever you learn something new, it's always the beginning phase. Let's just do the right things, follow the rules, and then down the road, potentially we can be in a position to be more aggressive and to even to take these ideas further. But the idea that I'm talking to you about right now is very specific. The same thing when the market is in balance like this, we might see ourselves of wanting to get long at this holding of VWAP to take it up to the other side of value. Don't do that. You can get to a place where you can read that well enough to understand that this is holding and to enter long and to take it to the other side. But that is not part of this trade. This trade is only looking for execution and entries at the value area extremes. And don't forget that, and keep that in mind. If you ever are trying to trade this and you're not entering at the value area extreme, you're not doing this trade. You're doing something else. Okay? So in all of this area that we're seeing, there's only a place here and a place here to get involved, and there's only a place here to get involved. And everything else should be sidelined. Now, that's the go portion. So we're drilling into that daily time frame, that daily VWAP, and we're looking for the entry, the action. We're looking to trade it. Now, the flow portion is going to be that context, and for this, we're going to be using higher time frames. What we're looking at right now on the screen, this is a weekly chart. So this is our weekly value area. This area here is the value area, but for the entire week. And then this is going to be VWAP, but for the entire week. Now, looking at this, what would be the action here? What do we take away? Understanding that we're supposed to be using this for context for the direction. Looking at this now, what would you say is the action that needs to be taken? Should we consider getting long here at value area low? The market is moved to value area low. We put in this very nice pattern here that had a false breakout. We returned right back inside of value. We then continued to hold value area low. We're holding value area low now. So should we look to get long and to take this up to the point of control? Take this up to VWAP? No. We shouldn't do that because we're not trading off of this information. We're just using this information for context and to help us get the right direction of what we should be looking. So when we're looking at this weekly VWAP, what we should be taking away from this is the direction of long, because we are holding value area, and understanding the rules that we went through, if we are holding value, we should expect the most likely thing to happen is that we move to the VWAP. And so we're not trading off of this, but those same rules apply to where we're using this for the direction. Now, in all of this area, there's only a couple times where this context can change. Where we are right now, if we start to push away from value, now the context has changed. We shouldn't be looking long, but we should be looking short because we are now holding outside of value. And if we're outside of value, we should expect it to continue pushing away. Alternately, if we move all the way up to the VWAP and we can't get through VWAP, now something has changed, because if we can't get through VWAP, we should expect a return back down to the value area extreme. So we were long directionally, and if we can't get through this, now something has changed to where we should be looking short. Now, if we get up to VWAP and we push through it, nothing has changed. We are still looking long because we should be expecting that we got through VWAP and we'll make a move to the other side of value. If we get to value area high and we can't get through that, now something has changed, because if we're going to hold value, we should expect to return back down to VWAP. If we get to VWAP on the other side and we push through and we're holding outside of value, then we should expect more to the upside, because if we're outside of value, the most likely thing for us to do is to continue pushing in that direction. So of all those scenarios and of all of these prices that the market could trade, there's only a couple of times or a couple of places where that context could potentially change. So when we're looking at this, we want to understand the context, and we want to make sure we're clear about when that context is changing and when everything is just staying the same. Now, lining these up, what we're looking at is on the right-hand side, we have our weekly VWAP, and on the left-hand side, we have our daily VWAP. The flow and the go here, part of go with the flow as a trade idea. Now, looking at this, what we should be doing here is getting our flow, getting our direction, getting our context from this weekly action. So this direction should be telling us that we need to be looking long. We're not trading off of this. We're then looking at the daily VWAP for our entry. And we're only entering at the value area extremes. So in a situation like this, where we have the context to be looking long, we should be looking to get long at the value area low. Now, as this pushes higher, if we find ourselves getting to the VWAP on the daily action here, what should we do? Well, we know that if this holds, we should expect a return back down to value area low. And if this breaks through, we should expect a move to value area high. Now, with this context, where the context is telling us to look for more to the upside as being the most likely thing, this can give us some good insights in real time of further expecting that we're likely to get through VWAP and go to the other side of value. Now, if we find ourselves testing the other side of value, what should we do? We're at the value area high here. Should we be looking to get short and take this back down? No. Because the context here is still telling us long. It's still telling us up. So for this trade idea, shorts are off the table. The only thing we're looking for is long opportunities. And you might be thinking, Corbs, what if we hold value area high and we move all the way back down to value area low? Should I just miss that as a trade and not take advantage of any of that opportunity? Yes, 100% you would miss that, because that is not this trade idea. There might be a way to take advantage of that move, but this repeatable action trade idea of going with the flow, in this context, there's no shorting opportunities. We're only looking for longs. And if we continue to push higher and find ourselves where contextually we're still looking long, and when we drill it in, we're pushing outside of value, holding outside of value, we can get long at this extreme of value, because value area extremes are the only place we look to enter. And if we're outside of this, we can look long, because if we're pushing away from value, we should expect us to continue pushing away. We have contextually looking for more to the upside. We have us pushing outside of value, holding outside of value. We're at the value area high where we can look to enter and we can look to take this up. Now, it's very important that we pair both of these together. And we don't want to just take one piece of this and start taking action. So in an example like this, let's say we are not looking at the weekly VWAP and we're just looking at the daily VWAP. In a situation where we hold VWAP, we come down to value area low and we're holding value area low. If you're just looking at this in a vacuum, you would probably expect to get long here and take it up to VWAP. But if we include the context, this is the same exact action here, the same price. But what we can see from our context is we have held value area high on this push here, and contextually, we should expect more to the downside and for us to return to VWAP. So in this example, the market continues to break down. And if you're just looking at this in a vacuum, you could take a loss on this trade, thinking that I got long at value area low and it failed. But this trade idea is not get long at value area low and get short at value area high. This trade idea is go with the flow. And in this exact situation, if you would have gotten long here, you would not have been going with the flow and you wouldn't have been taking this as a trade idea. Similarly, if we're in a situation where now we're outside of value and we're coming up to value area low, we're outside. So per our rules, we can expect more to the downside to be the most likely thing. Should we be looking for shorts here to take this down further? Well, when we look at our context, we've come down now to test this VWAP. And if we start pushing through this, that's when we can look for more to the downside. But as long as we're holding above this, we need to wait, because we're probably going to be looking for more to the upside here. And if you're astute, you'll observe that, well, Corbs, if this breaks down VWAP by the time I get that information so that I know we've pushed through VWAP, we're going to be very far away from my entry point. I won't be able to enter. That's fine. You'll miss that as a trade opportunity. You won't take advantage of that action. This trade idea is very specific. It happens, it's repeatable, and we don't have to force anything. It's not going to give us the opportunity every time the market moves to make money. But when this repeats, we'll be able to take advantage of it. Now, in a situation like this, we end up not being able to break through VWAP and returning to value area high. But again, if you're taking out this context here and you're just trying to trade off of the daily VWAP, you can find yourself in many situations like this where you try to get long, it breaks down and you get frustrated. You try to get short because it looks like it's holding outside of value, and then it flushes back in and you get frustrated when you're ignoring the actual context of this trade. You're not going with the flow. You're just trying to chase around price at these value area extremes, which is not the trade idea. Let's look at another example of what do we do in a situation like this. Looking at the daily VWAP, looking at the weekly VWAP, what's the first thing we do here? What's the first thing we're looking at? How do we decide what to do? And it might be helpful just to pause this recording for a moment and try to really analyze the situation that we're in and ask yourself, what should I be doing first here? What's the move? And if as you're looking at this, the first thing you decide to do is look at the daily VWAP and say, well, we're holding VWAP here, so I should be expecting more to the upside and a test of value area high. That would be the wrong thing to do. The first thing that we want to do is make sure that we understand the flow. We have to start with that. Because if we don't understand what direction we should be looking, there's nothing for us to do on this side of things yet. Again, this trade idea is not just trade these value area. It's go with the flow. Now, if we're looking at the flow part first, and we're looking at this higher time frame to understand the context before we worry about trading it, what is the context telling us here? We have the action that's pushed back into value. We've tested VWAP. We were unable to get through VWAP. We returned to value area high. We pushed through it. And now we're chopping around value area high. Looking at this, are you able to understand whether or not this is holding outside or holding inside of value? There will come times where it's confusing. And later in the program where we talk more about the performance, we're going to go through specifically how to understand in real time whether or not levels are holding or breaking. But regardless of how skilled we get with being able to read that in real time, there will still come times where it's confusing. And there will be times where we're not really able to understand the context. We're looking at the context, but it's not clear. I'm not sure if this has pushed outside of value, we've come right back inside and we're going to be heading lower, or if this pushed outside of value, it's not letting it back in and we're going to be continuing outside. I'm not sure. And if we're not sure, the thing that we have to do is wait. When we're not sure, we don't need to drill into this action and start trying to do something. We just need to wait. The reason that we wait is because every time the market prints a new price, every time it puts a trade on, every time we get a new candle, we get more information. And the more information we have, the more clarity we can see things with. And so if we're ever confused about what to do, if we're ever not being able to understand it, we just need to sit back and wait. When we're putting together context and we're putting together our trade ideas, we need to have clarity. And if the clarity is not there, the move is not to force it, but it's just to wait. And in a situation like this, when we wait, we start to get more information here, and it starts to become more clear that this is holding outside of value and we're pushing away. And then we can look at that on how this push away is shaping up. And as we're pushing outside of the daily VWAP, we can lean against this value area high to get long and to take this to continue in that direction. Now, up until this point, we've just been talking about the weekly and the daily. But as the chart book definition that I've given you, if you're using Sierra specifically, we talked about the monthly as well. And in the last session where we were introducing VWAP, we talked about the monthly. So where does the monthly fit into this? I would like for you to start with just the daily and just the weekly right now. And just get good at this, starting to understand and reading that flow, getting the context right by looking at that weekly action, and then being able to trade correctly on that daily. Being patient, letting it get to those areas, being clear about where your areas are that you want to enter, being clear when you're confused and waiting for more information. And then the monthly is something that you can add in at your own discretion. And I don't want you to necessarily do this now. If you feel up for it and you feel ready, go ahead. But what the monthly is going to do for us is to give us another lens that we can look through the context. Very similarly, there was a place, an example that we looked at earlier, where if you were ignoring the weekly VWAP and you just looked at the daily action, you might think that getting long here was the right idea. But in reality, things were pointing to the downside, and it shouldn't have been surprising when this pushes outside of value. So the same thing will happen here, that we'll see information on the weekly, and if we zoom that out and see it on the monthly, we can get a different perspective. And it can help us to understand that when the weekly and the monthly are showing us the same things, that this is a stronger quality of our trade idea, go with the flow. And if the weekly and the monthly have conflict, or if they're telling us different things, that this can be lower quality for our trade idea of go with the flow. But the same thing is going to apply with weekly and monthly. These are both for our context and to help us understand the direction. Now, if it is confusing to add in that additional lens right now, don't worry about it. Just start with the weekly and start with the monthly. This is a great spot to start. This will give you an edge. This will give you many opportunities. And then you can at some point add in at your own discretion the monthly if you'd like, or potentially never introduce that. That's fine as well. But I wanted to give it to you as an option when we talked about the charting, and I wanted to lump it in with that part of the program. But for our purposes now, and as you're starting this, just begin with the daily, begin with the weekly, and then we can add in the monthly after this. Now, the go with the flow, this theory part, these are the main things that we really need to understand here. And if this is going to be a trade idea that you want to trade and you want to make a part of your trading, then the core parts that make up the understanding and that make up the repeatable action, you need to commit this to memory, and you need to build up a level of competence with this, so that when you look at the chart, you start to recognize these patterns and you start to realize what is the flow telling me, what is where would I be entering to go with the flow on this as a trade idea. And we have, when the market is holding value, we're likely to return to VWAP. If we hold VWAP, we're likely to return to that value area extreme. If we break VWAP, we're likely to go to the other side of value. And then if we're holding outside of value, we're likely to continue pushing in that direction. And with all of these rules here that make up this trade idea for the repeatable action, all the language here is, if we hold value, we are likely to return. If we break VWAP, we are likely to move, right? And important to understand that this trade idea here is taking advantage of repeatable action that gives us an edge, where we can look at this and understand this repeatable action. We can see this. This is something that we can learn and that we can see before. And this is something that will put us in a position where we know what's most likely to happen next. But this is nothing that's going to work 100% of the time. This isn't foolproof. There will be times where you do the right analysis, but the trade idea still fails. And that's part of the game. This is part of the business that we're in. But looking at this and paying attention, this is what we want to get good at, is for starters, being able to look at the weekly, being able to look at the daily, and then just matching up these rules and understanding that when the context is clear, we will then drill into the daily action here, looking to execute, making sure that we only trade off of the value area extremes. Now, to recap some of the things we've covered in this session, we talked about the theory that goes into going with the flow. And as a baseline understanding that the market is trying to match together buyers and sellers, and through that lens, we can understand that the market really only ever balances or goes into some type of a trend. We either hang around in a choppy area, or we begin some type of directional action. We looked at the rules for going with the flow, the ones that we just covered, of understanding if we hold value, if we're unable to get through VWAP, if we break through VWAP, if we're holding outside of value. Then we looked at that understanding the go part, how those rules interact with the daily VWAP. And this is going to give us our initial entries, our targets, our exits, the places we should be looking for profit. And for starting especially, we're only looking to enter at the value area extremes. Then we looked at the reading the flow part and how those same set of rules, how that translates to the weekly time frame, and how we use that not to trade off of, but we use that to get the direction that we should be looking so that we can then take action on the daily VWAP. And then we covered multiple VWAPs just to introduce, if you want to zoom this out more and include another higher time frame, like the monthly, where that fits into the puzzle. And we stress the fact that you don't have to do that right now, and potentially you shouldn't do that right now, but that will be an additional thing that you want to add in later at your own discretion. Okay? Now, in the next session, I'm going to talk to you more specifically about the execution on this. So we'll look more about, we'll get more clarity around how exactly do we enter, where exactly do we target in these different situations. But for this session right now, I just wanted to introduce this as a trade idea so that you can get the theory behind it. You can start to understand the repeatable type action. Overall, this is not very complicated as an idea. This is something that if you get a lot of clarity around this, so watch this as many times as you need to, but if you get very clear about what these rules are, and with me sitting here explaining it to you, it can be a bit easier. But when you're sitting there by the screens with nobody but yourself and just looking at the raw action, there's a learning curve to being able to interpret this on your own and to make sense of this on your own. But there is nothing to overthink here. As a general idea and as a setup here, this is fairly simple, but it's very powerful. And this will day in and day out just repeat itself all throughout the weeks, all throughout the months, and we can get in there and we can take advantage of it if we learn this and if we get good at it. So you can take some time and process this. Make sure you will have either taken some notes or go back over and get this. A lot of information that I just went through very quickly, but this is on demand. This video is a recording, so you can make sure you get all the pieces. Like I stressed at the beginning, you don't want to miss any part of this, because it's easy, as I went through all this information, to miss a part of it, to get out there sort of half-cocked with this information, and then be frustrated because it's not working. But it's not that it's not working, it's that you're not doing it. You're actually doing something else. And then I'll see you in the next session where we'll talk more about the execution part. But let's get after it, and when you're ready for that execution portion, I will see you in the next session.